So I hope that you guys are all ready for the market to reverse. What's going on, team? It's Ricky with TechBit Solutions. I wanted to share with you what I'm doing differently in comparison to maybe the past week and a half. I've been shorting the market. We've been having absolute killer days. I had one of my biggest days, not one of, but my biggest day shorting the market last Friday, and it was all caught within our live session, and I made $53,000 profit shorting the NASDAQ market. When it comes down to yesterday, a little bit of a slower day, $6,000 today. Let me go ahead and just share it with you. I made $16,000 profit shorting the NASDAQ market with this triple leverage bear ETF. This goes up when the NASDAQ market goes down. I am going to step away from shorting so heavily. And I want to share with you why, and let me know in the comment section if you guys agree. One of the things that I've learned about shorting and or trading against the market is you need to learn when to call it quits, right? You need to learn when to pull out when you know that you're ahead, especially because when the market does begin to recover, it can recover in a moment's notice. And imagine getting caught at the very top of an inverse ETF, right? We all know that markets are more bullish than they are bearish, but based off of recent news that we heard last Friday, Jerome Powell, the head of the Federal Reserve, announcing that they're still very hawkish with interest rates. They're still going to be very aggressive, which was not the expectation that the market had of the Federal Reserves based off of our last CPI data report. All you need to know is that based off of last Friday, things were just worse than expected based off of what he said because of how aggressive they wanted to raise interest rates. Now, we had a really nice rally. If you look at SQQQ, we could look at it on the 4-hour time frame. From overall lows, we could see lows of $33 to overall highs. In a perfect world, that's 37%, almost 40%. This thing gapped up in about a week to a week and a half. It's insane, right? I'm so grateful for it that I was able to take part in that. I took a small piece of that, but I know all great things must come to an end. It's almost like the opposite of like meme traders, right? Where meme traders, they're hoping that something happens that's never happened before. And they continue to hold and continue to hold without any exit plan in place. And I don't want to be like that, right? I tend to be pretty early when it comes down to this, but I'm getting ready for the market to begin to recover. And I want to start buying and dollar cost averaging into quality companies that I see value in long term, meaning that with QQQ based off of its recent pullback, I know the market can continue to sell off, and it really wouldn't surprise me if the market does. But instead of holding a large position in SQQQ overnight, I'm going to take it day by day. Now, I'm not saying that I'm not going to day trade SQQQ if the market is super bearish, because if the market continues to aggressively sell off and direction is clear, I will day trade SQQQ. I just will no longer hold 5 or 10,000 shares overnight, right? It's just too risky at these levels, but I can manage my position and I can manage my risk all intraday with my day trade. But with that being said, I want to start to prepare for my long-term plays. So with QQQ, as we begin to approach that $300 potential support level, I want to see if we begin to consolidate and begin to show signs of a support. For all of my Learn Plan Profit members, this is where the 3 stages of a reversal comes in, right? When something is during the rejection phase, probably don't want to buy. When we get in that consolidation phase, maybe a light position. Then when we get into that confirmation stage, when it actually begins to recover, then that's when we can dollar cost average and or average up into our position. Not only with QQQ, but what about Tesla, right? Tesla, this is before its stock split. So Tesla recently breaking below the EMA line. It has the potential to pull back to lows of 255. Why not be able to buy Tesla at 255 instead of buying Tesla at 300 just like everyone else was trying to do because of its stock split? I would never invest in a company because of its stock split. I would invest in a company because I find it to be a good deal, right? That would make more sense as a long-term investment. The same thing goes for Amazon. If you look at Amazon, we got rejected by this moving average. We recently pulled on back. I don't know if we're going to sell all the way back off to $100 a share. We probably won't, right? But what if I can get it at a decent price point? The preparation needs to happen now. I don't want to prepare to buy when the market's already recovering. I want to prepare in advance, maybe be a little early, right? but have a light enough position size that even if things do get worse before they get better, that I can tolerate it. I think the worst thing that you can do is sit on the sidelines hoping for something to happen and waiting to buy at the bottom of a stock, yet we never know where the actual bottom of a stock is. There's a quick little quote, right, where it's not like timing the market, but it's time in the market. That's more of the mindset when it comes down to investing long term. We've seen this recent pullback. Markets can continue to pull on back, but that should excite you, right? Especially if you manage your position size accordingly. I talked to my Learn Plan Profit group about this today. We have NVIDIA, we have AMD. These are all approaching previous lows. Check it out, right? NVIDIA right now trading at 154 with previous lows of around 140. That's not too bad, right? I mean, it's still bearish. It's still looking a little weak right now, but it's at least important to have those conversations with yourself and plan out those investments now as the market is cheap, instead of trying to plan it out when the market has already fully recovered, right? How many of you guys felt FOMO, right? The fear of missing out when the market rallied, 2-3 weeks ago, right? We rallied up and a lot of you guys were asking, oh my God, I missed this reversal. Well, guess what? Here's your other chance, right? We know that the market will eventually recover. It's not that it has to happen anytime soon. Stop buying more than you can tolerate. But the idea is to buy when it makes sense, to buy when that fear is instilled in the market, to buy when most people don't see value in it because they're scared that things are going to get worse. But you bring it on, right? You embrace it. You know things can get worse, but that is why you decide to buy with a lighter position. And then once you do get confirmation of a recovery, you can always average up into that position. Be empowered to be selective, be empowered to be different. This is so important for you to start having these conversations with yourself now, not when the market actually begins to recover. It's the preparation in advance, right? Not just for when the market recovers, but also when the markets begin to drop, right? This is why I always talk about, even with SQQQ right now, based off of recent patterns, everyone's all happy because of SQQQ and the way that it's gapping up. But I'm looking at this every day. I'm like, it's only a matter of time for this thing to pull on back. I'm preparing in advance for a worst case scenario. And that's always what you want to do. You want to be someone that prepares in advance, not that makes a decision when something is actually happening, right? If this thing begins to sell off and then I'm like, oh, maybe I should consider selling, it's already too late, right? I might make an irrational or an emotional decision. I don't want to be like that. I want to prepare in advance, and I would rather focus on my long-term plays and then take these short plays day by day. We understand that shorting is of higher risk. And if you don't understand that, then I really hope that the market teaches you this in a very, I would say, respectful way. So if you guys have any questions about what we talked about today, feel free to comment down below. And for all of our Learn Plan Profit team members, just be ready for tomorrow's live trading session. As of right now, it looks like the NASDAQ futures market is already up. It's trying to recover. We're up about 0.38% during the aftermarket trading session, and it looks like it's trying to make a recovery. So I normally am pretty early to these things. We'll see if I am this time, but I'm okay. I'm okay with being early. I know that things can get worse before they get better, but I'm embracing it. I'm managing my position size, and with that, I'm managing my risk. So I'm very excited to follow up. I'll see you tomorrow for my live trading session. If you ever want to see what it's like to watch me trade live, click the second link down below, learn a little bit more about our Learn Plan Profit group, and see if it's a good fit for you. If you like it, I'm going to have a link right below that that's going to offer you $50 off LPP 2.0. So you can join us, watch me trade live as soon as tomorrow, and friendly reminder, you get lifetime access to all of it. You get lifetime access to our A to Z video lesson library, our daily live trading sessions, our private group chat, and yes, it also gives you access to our TechBuds HQ. I really do appreciate you guys' time. Hope that it earned your thumbs up. Please consider subscribing and comment down below what you think about my preparation in advance for the market to recover. Do you think that it's too early, or do you think that it's clever to prepare in advance? Like always, let's make sure that we end the year on a green note. Take it easy, team.